Thank you very much. Good morning, Vilius, and good morning, participants of the European Banking and Finance Conference. Happy to be with you, despite the fact that I only have to be here digitally. So my name is Lina, and I'm going to be your guide through a shattered legal landscape for credit service managers, and that is for debt collection companies. I only have 10 minutes for this, so bear with me and let's kick off. So first, a little bit of an introduction to Intrum, where I work. Intrum is a company having 100 years of experience dealing with credit servicing. We are the market-leading company in Europe, and we are present in 24 different markets. Worldwide, we work with a complementary network of 160 business partners around the world. But what is really key for us is to help companies prosper by caring for their customers, meaning that we need to ensure both that the bills get paid, but also we need, most of all, to support consumers to get out over indebtedness situations. So how are we regulated? Back to where I started, a very scattered landscape. Basically, we have two different types of licenses. The first one is an ordinary debt collection license, and that's quite common throughout the European companies. We need that to carry out debt collection, and it's a lot oriented towards consumer protection. The second type is actually what we need for being able to purchase credit portfolios. But what is significant for both licenses is that the authorities supervising them could be anything from national central banks to financial supervisory authorities, a local police station, or a data protection authority. So very different. But what I think is important to mention here is that debt collection is different from banking in the way that we do not grant the original credits and we are not allowed to take on any bank deposits. So that's the reason why we are not subject to capital requirements such as CRR or CID that you would recognize in a bank. Data protection, yes, we process a lot of personal data. So that is, of course, very important. And since May 25th, 2018, we have been mapping, analyzing the impact for the industry, for our clients, for staff, but most of all in relation to our customers. And we started already in 2016, once we knew about the GDPR requirements. And as you can see on this slide, there are a lot of areas that we have covered. So it's very important for us that everyone feels comfortable with the way we are processing the data. But back to the very scattered landscape. I would like to point out, first of all, some of the conclusions we've made in this area. So first of all, debt collection is separately regulated from other businesses. We have our own legal ground to rely upon with an own purpose. But we also decide upon the means for processing the data. So normally what happens is that we load the data into our own independent debt collection systems and we start the processing. And for this reason, we consider that it does actually make sense that we should take full control of the data as data controllers, being able to take on the full responsibility to ensure the security of the data we process. This and many other specifics for the debt collection business, such as using scoring techniques, is actually documented in one of the first, I believe, which will be the first code of conduct for personal data processing, which is currently subject to review by the European Data Protection Authority. So we as an industry, we have worked together with our pan-European branch organization, FinTechs, to produce this. So we're kind of pioneers in this area, I would say. Another area, really important, is about treating customers fairly. So when I joined Intrum some 5.5 years ago, I was told that it's not possible to create a group common policy on how to deal with the customers because the local national debt collection laws are so different throughout Europe. But since then, I have gathered several times the local compliance officers in our countries, and we have worked hard to set the minimum requirements together. And the overall result was actually approved last year from our board of directors and is now being implemented throughout all Intrum countries. So I'm proud of this work that we have done. And overall, the areas that we cover in this, I believe now 15 pages policy, is around confidentiality, about never putting any undue pressure towards the debtors, having special care and attention to vulnerable categories of debtors, and I will come back to this, and always ensure that there is a legitimate claim behind the demand. Cost, fees, interest levels, of course, to be reasonable and proportionate to the claim that we are processing. But also very important is to learn from mistakes. So we have introduced in all of our countries proper complaints procedures, and the reason for this is, of course, that we always can improve. So a very highly related area is around COVID-19. For everyone, I mean, we had also to adopt to a very new situation, which led to the fact that we adopted new guidelines of how to treat customers in these times. And we all agreed that these categories of customers should be treated as vulnerable. We have also applied quite a broad scope, so we include hospitalized customers or unemployed, or also customers taking care of their close relatives. So what do we offer in these situations? We offer to frozen the payment plans up to 6 months, and then we have a second review of those. We also promote, of course, digital channels to avoid having physical meetings. But on top of this, we have bi-weekly checked in all our countries where we operate the specific regulations being imposed for our business due to COVID-19. So quite a lot of restrictions, but we see actually a positive trend now that the impact is rather declining than increasing. And of course, very important, we pay attention to any kind of instructions coming from our commercial clients in this area. Anti-money laundering, yes, I too will touch a little bit about anti-money laundering because it is also for us a very important topic, and also the dealing with trade sanctions. So first of all, can credit servicing companies actually be exposed to money laundering? Yes. On this slide, you can see a few situations listed, and these are based on real cases. These also include identification of dealing with sanctioned either commercial clients, but also debtors. So I think it's fair to say that when the procedures are being tightened in banks, but also hopefully in payment institutions, there will be other ways to look for money laundering, also in relation to our industry. So it is important for us to set minimum requirements also in this area. So that's why we have created group common function how to deal with this. The huge challenge, again, is back to the shattered legal landscape that we have throughout Europe. So what you see on this slide are the European countries which have imposed some kind of anti-money laundering laws in relation to debt collection. So we have chosen to put them into different categories. So either it can be laws that are applicable to the debt collection service in itself, or it could only be applicable when we purchase credit portfolios, or in some cases, it's only applicable when we are servicing bank portfolios. I think what is important to state here is also that we have still a few countries where anti-money laundering laws are not applicable at all for debt collection business. But we have seen only during the past 5 years quite a fast development. So we foresee a development, and we are also having a dialogue with the European Commission around this. The main message here is that in the credit servicing industry, there are always 3 parties involved. So it's the commercial client and the credit servicing company where we have the contractual relationship. And there is also the consumers, of course. So how to apply these requirements, for instance, KYC? I would say that in the vast majority of cases, KYC is applied towards the commercial clients because that's where we have the contractual relationship. But we do have exceptions from this rule as well. The key solution to this is, of course, to apply a risk-based approach, because quite often, for instance, when we purchase credit portfolios, most of the consumers will remain dormant, as we say. So it doesn't make sense actually to apply proper KYC to all of these. Again, the risk-based approach is key here. Finally, some words around the interaction we have in Brussels with different working groups of the European Commission, but also with representatives of the Council and of the Parliament. We are involved in quite a few initiatives here. I think the one that is most important for us is the upcoming non-performing loan directive, which will create opportunities to have license requirements for credit management services, but also for credit portfolio purchasers. Main message here is that we consider the directive to be applicable for the whole credit servicing business, not only for servicing bank portfolios, but because that's more aligned with the current license structure that we have today. In conjunction with this, there are also other initiatives such as putting up pan-European non-performing loan platforms and also creating asset management companies. These could be either privately financed or government supported. We are also part of the upcoming revision of the Consumer Credit Directive. The reason for this is that some countries, our local entities, need to be licensed as consumer credit providers. Last but not least, the upcoming action plan in relation to anti-money laundering. We have quite a lot of input in this area as well. So that was all for me. Thank you very much for having me.